for the financial year ended FY22-23. Bank is represented by Managing Director and CEO Sri Atul Kumar Goyal, Executive Director Sri Vijay Dubey, Sri Kalyan Kumar, Sri Binod Kumar, and Sri N. Paramsivam, and other senior members of the top management. The structure of the con call shall include an opening statement by MD and CEO sir, and then the floor will be open for interaction. Before getting into the con call, I will read out the usual disclaimer statement. I would like to submit that the statements given herein are not guarantees of future performance, and undue reliance should not be placed on them. Such forward-looking statements necessarily involve known and unknown risks and uncertainties, which may cause actual performance and financial results in future periods to differ materially from any projections of future performance or result expressed or implied by such forward-looking statements. Investors are therefore requested to check the information independently before making any investments or other decisions.
Sir, I think your voice is not audible.
Rakesh, am I audible to you?
Yes, sir, I can hear you, sir.
So properly? Yeah, okay.
Yeah, I can hear you, sir.
Yeah, yes. Can we start with what disclaimer you already read, na?
Yeah. Yes, sir. Disclaimer over. Thank you, and over to you, MD.
Good afternoon to everybody. I welcome all the analysts who are. Yeah. I am happy to share the result of the quarterly closing March 2023, as well as the whole of the financial year 2022-23 of the Punjab National Bank. And before I start, I think this quarter was remain a very good quarter for the bank, because if you see last 5 quarters which we have published the result, this is the one of the best quarter, because the profitability has increased tremendously. Gross NPA, net NPA has reduced drastically. Operating profit and net interest margin has also increased, and as well as PCR is also increased. So I will give some of the idea of the whatever the we have performed last quarter and the last financial year. Gross business of the bank increased by 12.14% to the tune of the 11,65,000 crore. Then gross deposit increase YoY of 11.77% to the rupees 12.81 lakh crore rupees. Gross advance increased by 18.68% at rupees 8,84,681. Saving bank, there was a growth of around 2.72% and stood at rupees 4,63,987 crore rupees, and CASA share is 42.98%, and the RAM share out of the total advances is 4,69,981 rupees lakh crore, which is 55.3%. Now come to the profitability part. The net interest income, there is a robust growth of 30.05% YoY, which used to be around 7,304 crore rupees in the last quarter of the 21-22 March quarter, has increased to 9,492 for the quarter ended March 2023. Similarly, the operating profit, there is an increase of around 11.42%. The operating profit for the March 22 quarter was 5,265 crore rupees, which has increased to 5,866 crore rupees. As far as net profit of the bank is concerned, net profit of the bank in March 2022 was 202 crore rupees, which has increased to 1,159 crore rupees with a growth of 473.57%. As far as assets quality of the bank is concerned, quarter by quarter, there is an improvement in the assets quality. And one more thing, important thing, the every quarter from the June 22 to March 23, the recovery was much more than the addition. GNPA, which used to be around 92,448 as on the March 2022, has reduced to 77,000 328 crore rupees. And GNP in the terms of the percentage, 11.78% March 22 has reduced to 8.74% by March 23. Net NPA, which used to be around 34,909 crore rupees March 22, reduced to 22,585 crore rupees, and net NPA, which used to be 4.80%, reduced to 2.72%. And we have given the guidance for the 9% for the gross NPA, which reduced to 8.74. Similarly, we had given the guidance for the 3% of the net NPA, which reduced to 2.72%. PCR, which used to be around 81.60% by the end of March 22, improved to 86.90%. And one more thing, as I told you, the recovery, the recovery versus slippage. There was a lot of improvement in the recovery was surplus. June 22 quarter, recovery was 7,057 crore rupees, which increased to 8,565 crore in the September, and 6,035 was in the December, and 7,439 crore rupees was in the March. As against the target of around 32,000 crore rupees for all of the year, we have recovered 29,096 crore rupees. As far as slippage is concerned, slippage is reducing quarter by quarter. In first quarter, June 22, slippage was 6,468, which reduced to 5,979 in the September quarter. Further, it reduced to 4,072 in the December quarter, and further it is reduced to 3,996 in the March 23 quarter. So bank has done a very good as far as the recovery and the asset quality is concerned. As far as capital adequacy is concerned, there is a increase of the 100 basis point in the CR. It was 14.5% in the March 22, which has increased to 15.50%, and the Tier 1, which was 11.73%, increased to 12.69%. And cost of deposit, which was 4.15 in the December 22, 3.97 in the March 22, increased to 4.54. Indian advances has also improved, which was 6.80% in the March 22, improved to 8.05% in the March 23, and it was 7.35 in the December quarter last year, 22. And cost to income ratio, there is an increase in the cost to income ratio from 46% to 54.59%. This is the major on account of the increase in the employee cost. Last quarter, March quarter, we have made a provision of 278 crore rupees for the wage revision, which is due from the November 2022. November and December we have provided in the December quarterly result. And AS15, we have made a provision of 1,244 crore rupees, which includes the wage revision and the impact of the wage revision on the gratuity as well as on the pension. We have also made a provision of PLI, performance incentive, of 103 crore rupees, against out of which 79 crore rupees was provided in the December quarter itself. Because as per the bipartite settlement, if improvement in the 5% in the OP, they are all the staff is entitled for the 5 days PLI. So this is the reason of the increase in the cost to income ratio. As far as NIM is concerned, NIM domestic is 3.38 and NIM global is 3.24%, as against the 2.86 in the March 22 and 2.76 global NIM in the March 22. AS15 I have already advised you. As far as provision for NPA is concerned, March 23 we have made a provision of 3,624 crore rupees. Credit cost is coming 1.72%. It was 4,563 crore rupees in the March 22, which was around 2.45% as a credit cost. December 22 figure was 3,908, which is coming 1.87%. Whole of the year, for full year, credit cost was 2.03%. As far as RAM is concerned, as I told you, it was 51.23%, increased to 55.31%. OTR restructuring, standard outstanding as on date, OTR 1 is 3,174, OTR 2 is 7,760 crore rupees. As far as SMA 012 is concerned, SMA 012 in March 22 was 1,75,391, which reduced to substantially in the December, and as on March 23, the total amount is 70,762, out of which 850 crore rupees in the SMA2 only, and 5 crore and above SMA2 in March 22 is hardly 82 crore rupees. As far as fresh slippage of 3,996 is concerned, it is Agri May around 1,253, MSME 1,337, retail 660 crore rupees, and other 260 crore, existing 478 crore rupees. As far as our pricing on the credit portfolio is concerned, around 85.20% is the floating, which is based on the MCLR may around 35%, RLR 26.39%, RLR Elite is 12%, and TBLR 10%. Fixed is hardly 7.16%, or 4.3% in the foreign currency, etc. And remaining 3.3% is the base rate as well as the BPLR. One more thing I would highlight to all of you, this fresh underwriting. We have taken a lot of initiative for the improvement in the underwriting as well as improvement in the collection efficiency. I will give one data from the 1st of the July 2020 to 31st March 2023. Around 5,72,539 crore rupees loan we have sanctioned, out of which 5,18,257 crore rupees we have disbursed. 4,16,638 crore rupees is the outstanding, out of which the NPA is 1,178, which is coming around 0.23%. So this you will get the how the new underwriting standard is being done in the bank. The recovery from the NCLT in the last full year, first quarter was 693 crore rupees, quarter 2 was 778 crore rupees, quarter 3 was 730, last quarter it was around 1,000 crore rupees. So as far as the investment is concerned, STMA around 79% is there, AFS is around 20%, and modified duration of the AFS and the HFT portfolio is 2.53%. So this is my initial remarks to all of you. Now I would like to give answer of your question. Thank you. This last year was very good, and I assure all of you the 23-24 will be very good year for the bank, and I will give some guidance also. Credit growth we are giving the guidance for the 12 to 13%. Deposit growth we are giving the guidance 10 to 11%. And CASA share we are giving the guidance around 43 to 44%. Net interest income we are giving around increase 10%, and NIM will be around 2.9 to 3% because repricing of the deposit has not taken place full in the last year. Although the loan may repricing has done immediately, but repricing of the deposit is to take place. Gross NPA we are giving guidance, it will be less than 7%. Net NPA will be less than 2%, and credit cost, which was around 2.03% last year, we are hopeful that it will further reduce. It will be around 1.5 to 1.72%, and the target of the recovery for whole of the year will be around 22,000 crore rupees. So this is of my initial remarks. Thank you very much.
Yeah, thanks a lot, sir. It's a very strong set of performance the bank has given, considering the rise in the margin on a sequential basis in the domestic margin, and also the asset quality has been quite good. Just one, couple of questions around, on the margin side, sir. So CD ratio, domestic CD ratio is around 68% currently for this quarter. So is there a scope to further increase the domestic loan deposit ratio from here, sir? Because that would help us on the margin front.
It was, if you see, it was around 69% as per our data. 69% was the CD ratio. So because we are having the excess SLR also, you all are aware. So definitely we would like to use, and without raising further deposit, even we will be in a position to improvement in the CD ratio in times to come.
Correct, sir, correct. And sir, ROA guidance that we have given for the FY24 would be, sir?
Return on assets. Return on assets, if you see, as on date is because the profitability was less. So I think next year, I think I will be in a position to give the guidance of the around. It should be around 50 or 60, 0.50 or 0.60 basis point, yeah, percent.
Oh, superb. Great, sir. Great. I would request Mr. Ajmera to unmute and go ahead with your question. Mr. Ajmera, please go ahead with your question.
Yes, compliments to Atul sir, Goel sir, and the entire team for another good quarter with a good set of numbers. Of course, the bank still has to go a long way because of some past negative legacies. Still, our figures are not that very encouraging, though comparatively, yes, it is definitely better. On many points, especially just now we discussed about ROA of 0.32 in this quarter and 0.17 in the last quarter is very low, and even the target also of 0.50 doesn't inspire much. And similarly, on some of the other data, if you look at, though your target for bringing the gross NPA down to 7% and net NPA to 2% is definitely encouraging. But finally, we would like the bank to come down below 5% in the gross and maybe below 1 on the net NPA. Many of the peer banks have started coming down to net NPA 2.7 or 0.5 or even 0.27, one of the small banks. Having said that, sir, what are our plans to bring down the credit cost? Credit cost is very, very high comparatively in our bank. And still, I think the target is also not being given very encouraging. So what exactly the bank is planning to bring the credit cost down, increase the ROA, and the write-offs are also very high in this quarter, 6,000 crore, in the overall year, 16,578 crores. So going forward, what are our views on that? This is my first just a question on these three things combining together.
Thank you, Ajmera ji, for the compliment. As far as your question is related to the credit cost, the credit cost in the last quarter was 1.72%. If you see the whole of the year, credit cost was around 2.03%. And we have already given the guidance that it should be within the range of 1.5 to 1.75%. And why we are giving this statement? Because you must have seen our quarterly number of the recovery as well as the addition. If you see the recovery quarter by quarter is reducing, and recovery quarter by increasing, and the addition is reducing. Because if I will give the number, the first quarter, June, you take the quarter of the June 22, the recovery was 7,057 crore rupees. And the recovery was increased 8,565 in September, and 6,035 is in the December, and 7,439 crore rupees in the last quarter. So if you make the total, it was around 29,000 crore rupees against the very robust target last year we have done for the 32,000. Similarly, this addition is reducing quarter by quarter. First quarter of the last financial year, it was June 6,468. And September, it was 5,979. December, there was a steep fall, around 4,072 crore rupees. And in last quarter also, it's further reduced to 3,996. So if we are making more recovery, and if we are addition is reducing, so credit cost is bound to reduce. Because aging provision is also reduced, because the 86%, more than 86%, we have the PCR. So I do not foresee ki there will be, but your point is very right ki although we are giving the guidance for the gross NP number 7%, 2% for the net NP number, as you are saying ki other bank has come down less than the 5% or the 1% the net NP. I fully agree with you. But because only if you see from where we have started last year, yes. 11.78, so we have reached to 8.74. It means 3% we have reduced last year. And the from the number of the gross NP from the 4.80% to 2.72%. So last time we have done very good job in the recovery, and I am hopeful this year will be a very good for the recovery as far as the addition will be further reduced, and the credit cost which I am giving you the guidance for the 1.52, it will remain 1.75. One more thing, because I am giving the return on assets, although I told around 50 to 60, 0.50 to 0.60%, but even if you see my net profit was around 2,507, and we are targeting ki it will be more than 1,000 crore every quarter. So if we take, it will be more than 4,000 crore rupees for the whole of the year. So even if I recalculate, so my return on asset will be around 0.40 to 0.42. Even we are giving the guidance ki it will range between we will try to improve to 0.50. But I think when we are saying the target of the net profit, so I think you can take it 0.40 instead of 0.50. Yeah.
No, I fully appreciate, sir. I mean, after such a strong team led by you, definitely during your tenure, I mean, things have been improved a lot. Yes, you are carrying the past, whatever is the negative legacy or whatever it is, you are definitely trying to improve the things. And we have a lot of expectations from you and this team sitting here. Sir, now with this ECL now coming, now the guidelines are not 100% clear, but is coming, is in offing. So the kind of report which you are submitting to RBI, or the kind of internal preparation which you must have done, are you prepared for that without any shocks or without any negative effect going forward? Have you worked on the numbers and have you made some provision on that, sir?
Okay, Ajmera ji, I will answer your question like this. Point number one, this guidance of the ECL, point number one is the draft guidelines. And final guidance is likely to come. I think we should wait for the final guidance. And moreover, in the draft guidelines, what will be the requirement of the additional provision? The RBI has proposed that they will give 5 years for this, because ultimately when we are talking about the ECL, it is based on the expected credit loss. As on rate, we are making the provision on the incurred loss basis. Big account which have turned to the NP, we are making provision, but expected credit loss the ECL expected credit loss. I have already given you the data of the last 2 and more than half year, from the 1st of the July to 22 31st March 2023, where I have already given how we are behaving our new book. 5.72 lakh crore we have sanctioned, 5.18 lakh crore we have sanctioned. This was 4.86 crore is the outstanding, where the gross NP number is 0.23 only, because this is the purpose of the underwriting standard only, because ECL role is only for the underwriting, and role of the PCR is also in the ECL calculation, because 81 to 86.90% we have already reached, and CRA also there is a 100 basis points improvement from the March 22, which was 14.50% to 15.50%. So considering all these things, I think there should not be any challenge. Whatever the guidelines will be receiving from the RBI, we will definitely ready for whatever the final guidelines will come.
Sir, coming to that, on how much buffer overall, like standard provision, restructured book, COVID restructured book, other than what is recognized and as per RBI guidelines and IRAC norms, what additional buffer or the provisions we have overall in the bank? Sir?
Ajmera ji, ultimately देखिए, what I am trying to tell, first 2 type of provision you are asking for the standard, what is the buffer in the standard. Point number one is we should see how much buffer we are having in the NPA provision also. Abhi, last year it was 81%. It is around 87%. Standard provision, definitely we have to provide as per the RBI guidelines. So definitely there is some buffer which we have provide for the as per the July 2019 circle. If the account will be resolved, so this provision will be reversed in the last quarter also, because we have made a provision for the standard provision for the some of the account which was falling under the July 2019 circle, around 500-600 crore rupees was the around the reversal in the March quarter itself. Even we are hopeful, even in the hopeful ki June quarter also, because the account is under out of the resolution plan. So definitely you can think this provision which we have made, it will be really, it is a buffer for us.
My last question in this round is around treasury book. The treasury performance, of course, because of the upward trend going on till now, till March, performance is not good everywhere. There are some reduction in the profits, or it's somewhere at losses also, MTM also. So in our case, how is our treasury book is placed, and how do we see now going forward when the rates are softening up, or sub 7 now, 6.9, 10-year. So can we get some color on our treasury performance in the coming quarters, and what are our basically our plans for that to strengthen
as far
and
as
make more profit?
Our treasury, Ajmera ji, our treasury is very active, or we are having the good exposure in the investment side also. As your question is, because it is a movement of interest rate. Already interest rate further fallen, because if you see the 10-year GSEC, it was around 6.95 to 6.99 in 4-5 days also. So, and we have already provided mark to market. So moment further interest rate will decrease, definitely we can make the profit, because we are earning profit on daily basis also with this yield of the 2.99, and we are immunized also, because if there is a risk of the interest rate, because our modified duration is hardly 2.53% for the AFS as well as the HFT portfolio.
Yeah, Ajmera ji, sir, can I request you to come back into the queue? There are other person also waiting for with their queries.
Oh, sure. Thank you. I'll come back. Thanks for giving me so much of time. Thank you.
Yeah, hi Bhavik. Can you go ahead with your question?
Hello.
Yeah, Bhavik, please go ahead with your question.
Hi, sir. So, congrats on good set of numbers. So, just 3 questions from my side. So, first, sir, as in what would be the LCR ratio? And hello.
Bhavik, go ahead. Your first question is LCR ratio. Yeah.
Yes, sir. So, second question, sir. So, we saw a very strong quarter-on-quarter uptick in yields. So, what drove that increase in yields? And is there any one-off there with respect to interest on income tax refund, or some proportion of recovery from written off accounts being apportioned to the NII line?
Bhavik, first question is the LCR. LCR in the range of the 150%. It
Okay.
keep on changing. It is within the range of the 150 to 160%. Your question is regarding the improvement in the yield. Improvement in yield on the 2-3 count. First count is the recovery. Not only the recovery in the technical written off is not coming in the interest side, because if we are recovering more than the principal in the written off account, then only the part is coming to the interest income. But basically what is the USP of the bank? 43% we are having the CASA. That is the one of the reason ki our NII growth is there, and the yield of advances is also increasing. Basically, recovery has the main factor, and even some of the account, if we are making 50 basis point, 25 basis point also, we are not allowing the opportunity to go. So this is the reason our yield of advances has increased.
Okay, understood, sir. And sir, so sir, as in, so on the NII line, as in for the full year, there is no interest apportion from recovery from written off, or there is some?
There is no, there is Bhavik, there is no, some portion is there because we are getting the amount in the substandard or doubtful category. If we are getting some money, so we are also in the interest income. But your specific question was if some of the recovery on the technical written off account was there, that was not there, but definitely interest income was very much there in the account which was NPA. And the whatever the recovery we have made in the last year, 29,000 crore we have recovered. Now, moment it is a 8 to 9% game. Moment you are making the recovery, so it will start earning the interest income now, because as on date we are not earning anything out of it. So this is the when the recovery has contributed to the improvement in the yield. Yeah.
Understood, sir. And sir, how do we look at NIMs going forward? How much cost of deposits do you see rising from here?
देखिए भाविक, as far as yield of advance is concerned, so 8.05 is the last quarter yield. So definitely, because some of the loan will be repriced, which was earlier on the MCLR, where tenor is, as far as cost of deposit is concerned, cost of deposit 4.54 in the last quarter, it is bound to increase, because entire repricing of the deposit will take place at the time of the maturity of the term deposit, because most of the deposit within the range of the 1 year to the 2 year, so entire repricing of the deposit has not been effected. Definitely, so in the next the current year 23-24, cost of deposit will definitely increase.
Understood, sir. So that's it from
And
my
as far
side.
as NIM also you have asked, NIM because the NIM was 3.38% in the last quarter. Domestic and global was 3.24, because we are also envisaging the cost of deposit will increase, because the repricing of the interest which were linked on the repo immediately done. So this is the reason we are giving the guidance for the next year. NIM will be between the range of the 2.90 to 3.
Understood, sir. Sir, thank you, sir. So that's it from my side.
Yeah, hi sir.
Yeah, please go ahead, Jay.
Sir, on your MCLR book,
Jamudra, we are not in a position to hear. Rakesh, we are not hearing you, Jamudra. Are you hearing?
Yeah, I heard him, but now his voice is not coming.
Yeah.
let me try.
Initially
Jay,
I
can,
also heard. Yeah.
Sir, is this better now?
Jay, your voice is not clear. It is quite feeble. We can't hear you well.
Sir, check on the MCLR book.
Your voice is breaking in between. Can we move to the next participant, Kunal Shah? Please go ahead with your question. Kunal, please go ahead with your question. Kunal, are you there on the line? I think Kunal is not there. We'll request Mr. Sushil Choksi to go ahead with your question.
Congratulations to Team PNB for stable result. Sir, what's your credit pipeline visible in this current quarter?
Credit pipeline, as far as concerned, we have already told you that growth we are envisaging 12 to 13%, around 1 lakh crore. 1 lakh crore loan is the already we have sanctioned. They are in the pipeline for the disbursement at various stages.
Are you seeing this more in infrastructure and corporate, or you are seeing in some other?
It is a mix of everything. It is a mix, not only everything in the infra.
Sir, you highlighted that the treasury may have a substantial gain or a stable gain in coming quarters to come. Can you broaden the statement little bit?
Nee, I just told the answer of the Ajmera ji up to last quarter. Because on account of increase in the yield, we were not in a position to make the treasury profit. Because if you see the last quarter from the March 2022 to March current date, March 23 mein rate was 7.31%. If you see the 10-year GSEC as on date 6.98. So my answer was this, because already there is a reduction of around 33 basis point. So by reducing of the 30 basis point, some of the securities which were in the losses in the profit, so we can make profit also, because it is a movement of the interest rate game. For 30 basis point is a true reduction in the 10-year GSEC from the March to till date.
Sir, my question was more directly related because the Fed is more or less indicated that it has topped out in interest rate. MPC has already indicated. Today, RBI's remittance of dividend to central government is already figured at 87,000, which may be in surprise. So the borrowing plan so far, which people were thinking would be huge, it will have an impact on money market. Currently, the short-term liquidity tightness may be there because of various factors led by RBI mopping up dollars, various maybe reasons. But what I'm sensing, some of the peer banks have indicated that 10-year bond may head towards 675 in the year end. So one is, has the rate cycle peaked? Second thing is, are you seeing more credit in front-ended in the first half? And are you seeing a sustainable treasury profit in 4 quarters, or you're just seeing in Q1, Q2 itself?
It is a matter of the booking also. Suppose I am sitting on the profit as on date. Suppose let us take a hypothetical example. Whatever you are saying is 6.75 by the end of the current financial year. Today is 6.98. Suppose it is as on date 6.75. I will be in the huge profit. So every profit I will not book immediately. I will book the profit on the quarter to quarter basis. So it will be scattered on the quarter to quarter basis. And first, whatever the liquidity, if there is a liquidity issue, whatever you are saying, some of the securities, if we are having the lesser yield, definitely we will sell, we will book the profit, and we will utilize that money for investing in the loan book so that we can earn more profit. It is a mix of each and everything. It is very difficult to answer whether when you will book, when you will say. It depends on the what is my liquidity position, what is the demand of the credit. Everything is interrelated.
Sir, I'm not asking you whether you'll book in Q1, Q2. I'm just asking an estimate whether you're seeing front-ended profit or the second half. It's okay. I'll take this question offline. Second thing, sir, what is your digital spend on the current year?
What is the
digital spend? Digital expenditure.
Digital. If you see the IT expenditure, last year, March 2023, it was 1,750 as compared to 1,150, increase of the 54.5%.
Thank you, sir, for answering all my questions. All the best to PNB team for future.
Thank you, Sushil ji.
Yeah, hi Jay. Please go ahead with your question. Jay, please go ahead with your question. I think again there is some issue in his line. Ashlesh, please go ahead with your question.
Can you talk about the slippages that we are seeing? We saw 2% gross slippages this quarter. Still meaningfully higher as compared to
Slippage, if you see, quarter by quarter, there is a reduction in the slippage. In the last quarter, it was in the range of the 4,000. It was less than 4,000 crore rupees. And quarter by quarter, we are of the view definitely there will be a reduction in slippage.
Okay, still target for
Your voice is not clear.
Rakesh, there is
Yeah,
some voice issue. We are not in a position to hear.
yeah. Also,
is this
we
better,
cannot
sir?
also hear. Yeah, it is better now. Please continue.
Yeah, so I was talking about the recoveries. So you have guided for 22,000 crores for FY24. Any chunky accounts that you expect recoveries over here?
It is a mix of all. I can give you some of the for the quarter one and quarter two what we are expecting from the NCLT. First quarter we are estimating. It is estimation around 500 crore rupees plus from the first quarter, and second quarter we are hopeful around 1,300 plus will be the recovery from the NCLT. So it is a mix of all. It is a small account also. Some money will come from the sale of the securities through auction. Some money will come through the OTS also. And we have also floated one scheme EOTS. That is, we are the unique in the industry. And this EOTS, the applicable for the amount less than 10 lakh rupees. As on date, we are having good number of account, 11 lakh account of 11,000 crore rupees eligible. Last year, we have recovered around 900 crore rupees from these EOTS. With customer is not required to visit. They can make the payment sitting in their home. And after making the payment, it is a end-to-end scheme, non-discriminatory. They are not required to negotiate also. And after making the payment, they can generate the no due certificate from the mobile app only.
We can't hear you, please. Your line is not clear to us.
This better?
No, better.
Yeah.
Its voice is breaking. I would request you to, go to a better reception area because we are not. We can't hear your voice.
Okay. Give a breakup of the slippages.
Sir, I think he is asking for the breakup of slippage, sir.
Breakup of the slippage. I can give you the breakup of the slippage for the last quarter. The agri is around 1,253 crore rupees. MSME 1,337. Retail is 660. Others is 268. And existing account it was 478. So 3,996. I can give you the for full year also. Maximum slippage from the RAM only. Agreement for whole of the year 6,542 crore rupees. MSME it was 5,836. Retail it was 2,126, and the remaining was 7,662, and existing was 3,178.
So talk about 270 crores 12th bipartite.
Yeah, provision. Yeah. Yes, you are asking slippage for the next year or this year also, Rakesh, because their voice was not clear. Yeah.
Related provisions that you have made this quarter.
Yeah. I will tell you. Wage revision, we have made 278 crore rupees provision in this current quarter. Last quarter also, we have made a provision of 181 crore rupees. In addition to this, AS provision, 1,244 crore rupees, which is also having the impact of the wage revision.
Okay.
Could I request Kunal to go ahead with your question? Kunal, please go ahead with your question. Yeah, Kunal, please go ahead. We can't hear you, Kunal. Yeah, Mr. Ajmera ji, would you like to go ahead with your question now?
Yes, thank you for giving the opportunity again. Many of the questions have already been answered by Atulji, but just some few discussion since I got this opportunity. One thing is that it's a point of basically a compliment only. If you see the most of the other peer banks, the employee cost has gone up because of these 2-3 provisions, and also maybe the performance linked bonus and other things. At least 10 to 20% the employee cost has gone up in this quarter. But in your case, it's hardly gone up by hardly 100 crore. Employee cost 4,570 crore as compared to 4,460 crores. Similarly, the other operating expenses also in your case has gone up by only 140 crores. So what is the basically what have you done? I mean, one is that all possible provisions which are required have been made. You already said about the wage revision that the provisions have been made. As far as the additional pension which was already made in the last year, any increment. So how this magic happened that this total employee cost and the operating cost has been under so much of control?
No. Operating cost, operating cost is under control, no doubt about it, because there is no much in the other operating expenditure. But whatever you are saying, payment to employee. If you see the March 22 data, I think you have not seen the data, please. March 22, the employees cost was 2,158 crore only, which has increased to 4,570 crore rupees in the March 23. It is basically double. There is no magic. There is double. So if you see the whole of the year also, whole of the year 21-22, the employee cost was 11,841 crore rupees, which has increased to 14,810. So employee cost definitely in the tune with the other bank has increased, and we have also made a provision, as I told you, from the November to March. 278 in this last quarter, 181 in the December quarter, and there was a lot of provision for the AS15 also. 1,244 crore rupees we have made in the provision in the last quarter, March. Similar provision was in the December also. Otherwise, this provision used to remain within the range of the 500 to 600 crore rupees. Double ho gaya hai, Ajmera ji.
So, sir, we generally once we finish the quarterly discussion, we concentrate more on the quarterly performance only. So I was comparing only with the December quarter and the March quarter, and in that there is hardly any increase.
You are very much right. You are very much right. December or March there was no much difference, but December vis-a-vis September or the March 2022, it was double. Right, we are worried how to reduce the employee cost.
No. So what I was actually drawing the point to is that in the coming quarters now, whether it is going to remain around the same 4,500, 4,600 crore, the employees cost, and the other operating expenses about 2,500 crore, so that we can have some idea about the future quarters, this thing, or is there anything coming there?
Ajmera ji, basically the employee cost major factor is on account of the AS15 provision also.
Yes.
And if you see the 10 years GSEC movement, there is a very volatile. I will give you the March 21, it was 6.18. March 22, it was 6.84. March 23, 7.31. And current, as on date, it is hovering around 6.95 or 96. Yeah. So basically, if there is a reduction in the 10-year GSEC, AS15 provision immediately increase. If there is a harden in the interest rate, AS15 provision reduces. So sometimes it depends on the movement of the interest rate also.
Okay, sir. Now something, sir, on this NARCL. What is the status there? How many accounts? Whether any account has been settled during this last quarter, January, March, or it's in offing? What is the status there, sir?
Ajmera ji, as far as in our bank, NARCL is concerned, around 38 account for rupees 17,658 crore rupees under discussion. Out of which, one account of 447 crore rupees we have already assigned to NARCL, Another two account also we have shown to the NARCL, but later on the some other ARC, they have increased the rate, and which they have not made with two accounts sold to the other ARCs. In addition to 38 account, which I told you, around 35,000 account is also under discussion for an amount of 16,892 crore rupees, where exposure of banking sector is more than 500 crore rupees, and in this 35 account, we are the lead bank.
Okay, so many of these resolutions are expected in the coming year now, isn't it, sir?
Yeah, definitely.
And sir, this 447 crore which has been done in March, you must have received the SRs for the 85%, which are government guaranteed SR. So
Yeah.
those SRs are also put in SRs and provided for 100%, or a separate treatment, is different treatment is given to, like suppose the 447 crore account, this must have been settled for about 100 crore or something. So you must have received about 85 crores of SRs. I'm just guessing. I don't have the exact number.
Yeah.
But for example, so what treatment to this SR has been given, and that your SRs of 1,518 that crores, that includes this SR also, and whether it is the entire amount has been 100% provided for?
Yeah, and this is the in addition to that, whatever the other SR available as on date, that has 100% we have provided. This is a very small amount, and treatment is same. Only the difference in this security received different because they are being government guaranteed and they are being traded in the market also. The amount was very less in this account here.
Okay, but you will be giving the same treatment like any other SR, providing them 100%.
You are right on the basis of the NAV. Yeah.
Sir, the last, if time permits, is on your CASA. Every bank's little bit decline is there in the CASA in the last quarter because people are opting for more of the term deposits. So going forward, do you have any specific plan or some scheme or something to increase the CASA of the bank, because you are at a comfortable level, in fact, and you can go still further. Punjab National Bank being a national bank, a Pan India bank, very, very old bank. So whether any plan, anything is in place?
I will tell you, this is one of the focus area, and this is the USP of the Punjab National Bank. As on date, if you see, 43% is the around the CASA of the bank, and we are having the 16 crore customer, and we are trying to increase the new acquisition in 21-22 around 71.33 lakh account we have opened, which has increased in the last year 22-23 85.02 lakhs. We are providing facility. We have provided TAP. We have provided all the 10,000 branches tab where they can open the account within 1 day. Earlier, because the branches was getting the document, they were sending to the back office. It was sometimes it was taking 3 days, 4 days, sometimes it is 15 days also, because they are raising the query. So after this implementation of the providing of the tab, this process of the new acquisition has become very good, and we are hopeful that next year definitely we will increase substantial number of the not only the SA, also the KA also.
Thank you very much, sir, and all the best to you with such a strong team. I think you will deliver more than what you are promising. Thank you.
Thank you, Ajmera ji.
Yeah, Aslesh, do you have any more questions? Please go ahead, Aslesh. Do you have any more questions? Mr. Choksey, do you have any other question to the management? Please go ahead.
No, sir, can you highlight something on your subsidiaries? What is your plan going forward, as that may be bringing in good benefit to the PNB?
Subsidiary, I think as on date there is no plan to sale of any equity in the subsidiary. As on date, no plan. Yeah.
And I'm not asking.
We want to increase the valuation of the subsidiary rather than to sell the subsidiary, because most of the subsidiary they are getting the dividend extra. So we don't know. As on date, there is no plan of sale of the shares invested in the subsidiary.
Sir, I'm not asking for sale of any holding from any of the subsidiaries, but as times may get better with PNB Housing, MetLife, and various other arms, the profits can shore up and support on cross-selling between PNB customer base
Yeah.
and the company. And that is the reason I asked you about digital spend.
Okay.
I suppose as on today, you're not even penetrating 2 or 3% or 4% of your customer base with your products. Can it go to 5%? Like yesterday in one of your peer large banks, they had aspiration for $1 billion of other income. Do we have some number, and what kind of cross sell will we do for our products and external products?
You are very much right. Definitely, we are taking all the steps how to improve the working of the subsidiary of the associate also, so that whatever the dividend etc. we are getting, that should be improved. So my balance sheet in the consolidated number will also increase, and we will also utilize the subsidiary for the other purpose also. We are having one of the subsidiary where we have got the approval from the regulator to do other activity also, which will be beneficial for the bank. We will use that subsidiary as our marketing agent for the generating the lead for the housing, generating the lead for the even for the retail side also.
Thank you for answering my question, sir.
So there are some questions which are the chat box. Firstly, starting through the question from Jay Mundra, breakup of 70,700 crore SMA number into SMA 012. If we can provide the breakup, sir.
Yeah, I can provide the breakup. Out of the 70,762, the SMA 0 is 52,622. SMA 1 is 17,290. And SMA 2 is the 850. The maximum is the SMA 0 only. And there is a accounting issue also which we are also addressing.
Got it, sir. Second question is from Kunal sir with respect to EBLR, MCLR, and fixed route book breakup that is already there in the presentation. The second question from Kunal sir is pertaining to the behavior of MSME restructured portfolio. If you can elaborate, sir, please.
The MSME in OTR one, I will give you the only for the MSME. कि OTR में amount around is implemented was 670. The standard में outstanding is 343. And if you see the OTR 2 also, OTR 2 में the MSME was around outstanding is 4,587 crore rupees, out of which standard is 2,657. Some of the account definitely in the OTR 1 and OTR 2 also has moved to the NPA. Out of this OTR 2, around 1,931 was the NPA.
And sir, I missed the total provision on the restructured book that we have, sir. Standard restructured book, total provision that we have.
Total provision on the standard book, it includes the, if you are asking the OTR 1 or 2, OTR 1 and OTR 2 mein, we have already given in the note to account, it is 10% of the outstanding. But restructuring is, there is some provision also, which we have to make the provision as per the 7 July 2019 circular also. Although that is not restructured, but we have to make the provision also.
Okay. Okay. And sir, one thing I noticed compared to higher deposit growth number on a YOY basis, NDTL growth is just around 7%. So have we reduced the borrowings from the book, or what is the reason for lower growth in the NDTL on a YOY basis as compared to deposit growth?
NTDL actually it is the combination of the deposit and the other liabilities also. So maybe some of the other liabilities have reduced, but normally it keep on changing on the quarterly basis also, because some part of the deposit is on the bulk side also. So it keep on changing also.
Okay. And so there is question from Bhavik pertaining to the SMA details that we have already given.
Rakesh, from where you have taken this data of the NTDL? If you see, the NTDL is on the same line. I am not seeing any difference. If you see my December 22 number, it was 11 lakh 52,000. And even if you see the March 23 number, 11,75,000. So from where you are seeing there is a difference. So it is not decreasing side. You are seeing a decreasing.
No, it is not decreasing, sir. In the slide number 16, sir, we have given investment portfolio and the NDTL number. Here the YOY variation is 6.93, and if I look at deposit growth number, that is global deposit
The
growth
11%, you are comparing with the deposit number also, 11% and the 7%. Well, average, sometimes it is on average basis also, na? Because if some increase in the deposit in the last, that is also a, yeah.
Correct. Got it, sir. Got it. Aslis, do you have a question? Your hand is raised. Do you have a question, Aslis? Please go ahead. I think that is all from our end, sir. I think there is no more question. There is no more questions, sir, from our end. I think we are done with the questions, and there is no further query.
Thank you, Rakesh.
Thank you very much, Rakesh. Thank you to all the person who have joined this con call also from my side. Now over to Deepak. Yeah.
Thank you, Rakesh, and we can log off. We all. Please log off, Mr. Rakesh and team.
We would like to thank everyone, PNB management, for giving us a privilege to host, and thanks everyone. And we can log off.
Thank you very much.